Hello viewers, welcome to this episode of Sensor 360 Investor video. And in this segment, we are going to take a look at overall educational training, and we're going to continue the Trader's Journey series, and also within that chapter, take a look at running trading like a business. So we're focused overall on wealth. So before we begin, just a quick word about the disclaimer: not providing financial advice. Please pause, read, and continue. Thank you. Okay, so without much further ado, so we are going to take a look at the sequence of running like a business. And in today's video, we're going to focus in on revenue streams and how does that translate to your trading business. Okay, just a quick reminder from the video that covered the various plans that introduced the topic. We're using four key plans: the business plan, the financial plan, and this kind of defines the what. The operating plan and the HR plan defines how. So these are all the objectives and targets and the strategies around what you need to do in your business. And this is how you execute and deliver performance. Okay, so in terms of setting up revenue streams, if you think about any business, business will either be selling products or services or both. And so what they sell is how they generate their revenue. And the more revenue streams that they have, i.e. different products, then the more cash will come into the company. Each product itself contributes to a profit or loss scenario. So the more they sell of a product at a profit, the more money they will make. And if they end up selling at a loss, they will lose money. So you certainly don't want to be selling a lot of products where you are losing money, because that defeats the objective. And then typically within an organization, money in terms of budgets will be allocated and will flow to products and services generating the most cash, which makes logical and financial sense. However, we do have an exception where sometimes companies will make a strategic bet and pour money into a new endeavor to create a new product, which hopefully at some point they'll be able to sell in the marketplace. And first of all, recoup the investment, and then thereafter go off and make money on it. So those are called strategic bets, and preceding the strategic bets is the R&D that's invested. So a good clue of that is how much money a company invests in R&D, and 10% is a good number. Companies that invest in more than 10% obviously are making big bets for the future. And then finally, as already mentioned, the margins and cost of doing business dictate what lines, i.e. products are kept. So sometimes you'll see products that go away. So for example, Costco, the Photoshop centers within the Costco concessions were removed a couple of years ago because finally Costco decided that people weren't coming in and weren't printing their photographs as they used to, given the transition to all digital and people just snapping photos on their smartphones. And so that business was going down and wasn't profitable for Costco anymore. So they shut that down. Okay, so let's take a look at revenue streams within the context of trading strategies. And as mentioned, a good business will have multiple revenue streams. So let's take an example with Apple. Apple started out with their computers a long time ago, and then they pushed out higher end versions of that, coming out with the Macintosh, then the iPod, the iPhone, the pods, the watch, TV, and then with the iPod they came out with streaming of music, and then they created an ecosystem. So Apple has continuously gone off and added new products and new streams. They've enhanced existing ones. They've created new versions of existing ones, and they've had a product cycle where every few years, they'll bring out something new, and that then creates a frenzy in terms of people wanting to upgrade. And so that's been a large part of Apple's formula, and has been extremely successful. So all successful companies will have multiple products, which generates multiple income streams for them. So a good long-term investor will have a diversity in their product lines in terms of companies that they own, and those will be across different companies. Different sectors and industries. And a good trader will deploy multiple trading strategies. So and a really good trader will weight those according to market conditions, because you can have a whole host of trading strategies, but not all of them are going to work at any given time. So you have to know what the right strategy for the right market condition is. In the same where good retailers know, what's going to be selling, depending on what season they're in, whether it's like winter clothes are in, or summer clothes are in, or spring clothes are in, or sports clothes are in. So yeah, you have to be able to adapt to external conditions. Okay, so let's take a look at some examples and give you an idea as to how this looks in practice. So I'm going to share some trading strategies from Sensor, which stands for Sunday Night Stock Review, and there's also a Saturday Night Stock Review, but both of them roll up to Sensor. And within the Sensor framework, one of the strategies, which is actually the topic of discussion on the weekly meeting, which is the Sensor Beat, we review the top 10 picks from a crowdsourcing strategy. And this is mostly a CanSlim style strategy. So that's one form of product line or trading strategy. We also have, and outside of this, the weekly meet, but part of the Sunday Night Stock Review, which is performed, look at breakouts, and this looks beyond the CanSlim and it's focused on the broader momentum stocks. There's a leaders basket, which is a market synchronized trading strategy. So whenever we have a call of a confirmed uptrend, we trade a basket, and then we monitor that and exit as a unit, and that's been reasonably successful and profitable. There's a buy low, a sell high strategy around SOXL, which is a triple ETF on semis. Then there's a swing strategy focused on TQQ, which has been used successfully for quite a while now. And then there's the broader swing trading strategies themselves around all sorts of manner of stocks, pullback strategies for stocks that are showing deliberate up moves, short selling for corrections and larger pullbacks. There's an option strategy built around several of these other strategies. So this is an incremental accretive strategy. And then there's also day trading, the strategy as well. And in addition, one more strategy just to share. There are more than this, but there's an earning strategy, and this wraps around both breakouts and also around day trading. So this is also an incremental accretive strategy as well. So here's a list of different strategies from the Sunday Night Stock Review process, and out of which the first one here is the topic of a meeting that's held each week, and then also the leaders basket, sometimes discussed there, but sometimes just handled outside of that. All right, so let's have a look at the other Sensor Saturday Night Stock Review. So this is a process that's run for longer term trading. So people that don't want to do shorter term or less active or more passive trading. So there's a stable growth stock group which focuses on long-term growth stocks and builds a core portfolio, and then we work around that. This also has index investing, mutual fund investing, and a few other long-term strategies as well. So all of these are strategies which equate to like a product line, whether it's like an iPod, an Apple, or Macintosh, and each one will produce a gain or a loss as to how well it's executed, how well it's understood, and how effectively it's being utilized. Okay, so at the end of the day, which revenue streams and trading strategies relevant or should be used? each strategy should be constantly evaluated in terms of ease of operation. So how quickly can I execute it? So can I get the orders in, and is there a time pressure, or can I take my time and put the orders in ahead of time? The time commitment, it needs to do all the scans, the searches, the process, the setups, all of the monitoring and handling of the stock once it's purchased. And then finally, and most importantly, the profitability. Is this strategy generating me money at the end of the day? So all of this requires uh, good record keeping and tracking metrics and tracking your performance. And that can be done by annual and quarterly reviews. So just like in any business, budgets reviewed at least quarterly. There's the interim reviews are done monthly. You should benchmark performance, typo here, and also do equity curve tracking. Okay, so that wraps it up. And just to complete the session, so this is just another instance of the trader's journey, and this is now getting into the heart of the execution side of how am I executing against a plan that I've put in place from running like a business, and how am I doing against that plan, and how is that plan doing against benchmarks. All of this will give you information on how your business is running, and your business of trading, or your business of investing, or your business of trading and investing. Hopefully you enjoyed this video, and there'll be a few more in this series later to come. Thanks for watching. Thanks for listening. If you're not a subscriber, please think about subscribing. I will see you next time. Goodbye.